Hope everyone had a good July the 4th holiday turnaround day today. I guess a turnaround Tuesday a little bit. Back in the range, kind of mirrored what we saw on Friday. Market was down, went up. Market was down, went up. And so up 21.45 per E-mini today on the new portfolio. Stock index portfolio 22. You see one trade on the Cobra 3 was down on the day. And then we had EVP1 was down minus 1,000. We had 60-minute breakout up on the day, about 14.75 per E-mini. Tick wave down minus 16.50. Tick pulse down. The short trades were down on the day, minus 625 tick pulse. And then tick reversal, it had one loser and then two winners, plus 770 on the day. And momentum reversal had the biggest trade of the day, plus 57.50. Big time reversal on this on the NASDAQ, so really nice trade in the NASDAQ futures. And looking at this setup here, so I think we are in a crude oil drop below 100, and I think we're due for a bear market rally, a bullish move. And what I am recommending for tomorrow's trade is to start this with 4 micros on the 200K portfolio, 1 micro on the 50K, and I'm going to show you the portfolio calculator as well. So as of last Friday, we were in a 27, what kind of drawdown? With 27,770. 3 pretty brutal days in a row. We were equity peaks here on this hypothetical portfolio setup. Minus 80,695, minus 15, minus 34.80, and up about 2,000 a day. These aren't the final results. I will publish those, run the final calculations with slippage and commission. And let's look back at January. And there was a similar drawdown scenario, a similar pattern. There was a 22K profit on January the 5th. And then if you come down here, there was a 16.5 loss and a 4,700 loss on January 25th and 26th, and then 3 big days in a row. We had a small day on the coming out of a holiday today, but we are going to take a calculated risk here. That was a 30K run up there per E-mini, and we're going to take a calculated risk here. It's about $5,000 per E-mini from the worst case drawdown, and with 4 micros, it's about a $2,000 risk. And so you have to risk a little more than that. You don't want to just stop right when it hits that worst case drawdown, and it's based on an end of day basis as well. So what's similar is you see this $20,000, you see a $20,000 run up here on May the 27th, and you see a nice gain here, 12,000. We saw that huge run up at the beginning of January on this portfolio, and then instead of a 16 and a 4, you see a 15 and a 3. You also have a minus 8,600 right there. So, and then we're about plus 2,000 today. Once this is set up, it'll be July the 5th, and you'll have that in here. And so we are right at, it'd actually be a 25K drawdown after today. So 25, I mean, we're going back the last 11 years. This says 51,000 worst case drawdown. We're going back the last 11 years for relevancy's sake. And the worst case drawdown in the last 11 years is about 32,000. So about 7K per E-mini, or about 3,000 per 200K portfolio if you're trading 4 micros, and about 750 to a worst case drawdown trading the 50K portfolio on 1 micro. So looking for a bounce here after this drawdown, and we'll see. You know, it could make have a losing day tomorrow. It could come down here in this area, make a little bit of a worst case drawdown, and then bounce. But we have tight risk management on this, and this is what we're recommending for tomorrow's trade, is to jump in on this portfolio if you're ready to take the calculated risk. If you have the portfolio subscription, this is a stock index portfolio 22. I'll show you what those look like on the micros as well. So here it is on the micros. Tick fader had an extra trade that didn't show up on the E-mini S&P. And you need to refresh your .D symbol since yesterday was a holiday. So tick fader had a little bit of a profit. Cobra 3 had a loss. NASDAQ, I want to turn on automation for these as well. EVP1, same trade. 60-minute breakout, same trade. Tick reversal, the same trade. Tick pulse, the same trade. This one had tick wave. minus 160, and it had 2 tick wave trades. It looks like the E-mini version did as well, so just double checking that. So all the trades look the same. The momentum reversal was the biggest trade on the day. This one struggled. It's having a nice run the last couple of weeks. VTNQ went short, lost on the day. And so those are the trades on the day for the stock index portfolio 22. Again, I recommend, the recommendation is to trade this tomorrow. It's a good drawdown alert entry point, good timing in a cycle for potential trends in the market with crude oil dropping could create a good bear market rally, potential upside of the markets, and we have some of our best days on bear market rallies and markets that go up. And today was a small up day, and so looking for some follow through tomorrow and throughout this week. So potentially a good time to trade. Once again, this isn't predictive, but it is managing. It's a managed risk scenario, calculated risk scenario based on what we know about the market and the way our strategies are working right now.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.